Good day, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, July 8th, 2024. It's 6:40 p.m. right now, and I want to remind you, today, Monday, the 8th of July, my sale is over. It's based on Central Time. Our computers will turn off the sale, I found out, at 11:59 p.m. Central Time. So from when I'm recording this, you got just over 5 hours. IraEpstein.com. 35% off any of my courses. I have people that are buying all three. They're smart to do it. And you can take them on your leisure whenever you decide. Once they're in the book for you, they're in the book. You just let us know when you want to start it, and away you go. It's that simple. The research, that begins the day you buy it. So you'll get right into the system. You'll have your access. You get the member login right away. Within the next 48 hours after that, typically the next business day, you will get from us your mobile application, the download, your password, and you can get everything right coming into you. My morning videos, these videos, everything plays through that too. So I hope you take advantage of it. Before we get too far, maybe we should talk the news of the day, and I want to get to the bigger screen of that. Okay, that'll be right here. There we go. My fault. Redbook Group going to come out with retail sales at 755. So we've been seeing them for a moment there in very early June. They got up, I believe, over 6%. Now they keep falling back. They're getting closer to the 5.5% number. We get week over week. There's two ways they measure it, but both numbers are under 6% and slipping down at this point. Fed Chair Powell at 9 in the morning is going to deliver his semi-annual monetary policy report. API numbers at 3:30. At the same time, the EIA is going to release their short-term energy outlook report. And the Federal Reserve this afternoon at 2 o'clock released consumer credit. It's a shocker. In the month of April, it had gone up 6.4, if you will, billion. It went up 11.3. This is way beyond what the market was looking for. Does this mean the consumer is tapped out and he has to go and do everything on this? You know, if you see retail sales fall and the consumer credit go up, he's putting his groceries and other things on this, it won't be the best story. Speaking of stories, did any of you see today, and it was something to see, the press conference that came in? I was watching it at the White House press conference on Fox was carrying it. Wow, contentious. Apparently there's a doctor that has visited the past 8 months in a row, once a month, a Parkinson's specialist at the White House. That's all that the news had to say, and everybody, of course, was on it. Who's he seeing? What's the name of the doctor? Well, they're not going to give you that, but it's just another thing that people let out. I mean, you talk these dirty politics, it's happening right in front of us every which way. It also came out that they have released, as they said they would, the 1 million barrels of gasoline leading up to July 4th to try to tame gasoline prices. And they did so to a degree. They tamed it. It still went higher, but it did tame it. Give them credit for that. Hurricane Beryl is not doing the damage that they thought it would do. Grain prices got sort of smashed today because right now you're in that part of the year. I traded these for 50 years, since 1969. So I've been around this for a while. And to make a long story short, nothing changes in grains. Got to get the crop in, that's one risk. Crop's got to grow to a certain point and come out of the ground, the silking, the pods, blah, blah. That's the next point. Then you get into the quieter period where it's got to just continue to grow. Do we get enough sunshine? Do we get enough water? Well, you're entering that stage. You're not quite there. You're entering that stage. You're going to be fully in it very shortly. And everything's going right. When it goes right, prices go down. You got to go back like in corn. Go take a look at how nasty it was, 2009. I know Linn Associates put out a chart on that today, and it was quite phenomenal. If you take a look at the break the market's at. This is a very dangerous time. I warned my subscribers on weekends, it's like rolling the dice. Which way is it going to go? It has nothing to do with the charts after a moment. It has everything to do with weather, but it'll come back to the charts very quickly. In the stock market, we have this week, well, let's start. We've got the Fed chair speaking on Tuesday and Wednesday. I expect him to say nothing that's new. It's data dependent. Supply, demand, and labor is much more in balance at this time. They're being data dependent on inflation, but they like the tone that it's taking, and they have every reason to believe their restricted part is working. It's just slower than they thought, but it is working. Okay. Is he going to say, oh, come July, we're going to cut rates? Of course he's not going to say that. Come on. But that's where you're at with it. Where I do think it gets exciting is Thursday CPI, Friday PPI, Friday, first day of earnings. It's hard to believe we're back into corporate earnings. These markets, especially the NASDAQ and the S&P, are at new highs, basically. They have to keep going that way to get going. But if you look at RSP, which is the non-weighted S&P 500, it looks nothing like the S&P here. It is a market that has been under pressure, and that's because once you take out of these two indices, AI, artificial intelligence stocks, a whole different world develops. And that's why you're something of a laggard in the Russell and in the Dow, comparatively speaking, okay? When we look at the S&P, if the market were to finish here, it's a new all-time high close. That's simple in the futures. When we look at the price action, you can see you've had one of these patterns where literally, let's take back tonight, literally 1, 2, 3, 4 days in a row up, in a row. So this market has really actually done phenomenal. You could count the day before that even, not from the lows. So day 1, 2, 3, 5 days in a row up. And then when you add back today, if it stays up, this is where you're at. Powerful. Market's giving no quarter. It's a vertical price rise. And if traders are looking for breaks to come out, they didn't get it. Where did the market stop? If you take my charting course, you learn about what I call the line in the sand, the neutral number in the chart. The DMZ zone between North and South Korea equates to when you're over that average, you have a bullish bias. When you're under it, a bearish bias. It can't get simpler than that. And you filter the swing line to figure out which way you're looking to go. So if the market's over that, am I ever looking to go short as a trend trader over the 18-day average? Never. I can get out of longs, that I teach, but going short, no. And it keeps you out of trouble. If you're going short under here, that's one thing, but if back over it and the swing line turning up, so long, you overstayed your hand. That's how I teach it. When I look at Bollinger Bands, big important number. You only stay over a Bollinger Band 5% of the time. Now please understand, that is not a signal to go short. The longer it stays on a Bollinger Band, actually the stronger the market is getting. But the first challenge of it combined, if you're not embedded, is what? That's where traders come out. But once you embed a market, embedding means that the red and the blue numbers are over the AB number, and they're doing it for at least 3 sessions in a row. Remember, I have to use the word sessions. Well, this is a daily chart, it's days. Weekly charts, monthly charts, 15-minute charts, same concept. When you lock in, that's a bullish sign. And once you lock in, I have a rule as to how to buy the market on the break. So I won't go into that. That's in my enhanced Bollinger Band course. The same thing in the NASDAQ. These are both bullish markets, both tearing. And again, I'm going to point out, look at how important that 18-day average of closes is. Remember what I just said to you on the Dow and the Russell? These are the old highs, my friends. You're nowhere near them at this point. Doesn't mean you can't get up to them. Doesn't mean they can't catch up. And eventually, all this tight sideways action in the Bollinger Band, you're going to break out to the upside or the downside. A common thing that I see when I see this is if I were an options trader, I'm buying a call and buying a put, betting that the market will break out one way or the other. And there's many strategies you can do that. You can buy a call at one number, buy a higher one, blah, 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 all the way down so that you don't just have everything at risk. Talk to your broker about that. I deal with straight out buy or sell, but do you think I don't understand options? I do. Same story in the Russell, and in this one it's even more bearish, as you've got the 100-day average in the Bollinger Band as your resistance points. Yes, it's getting the sideways action, but if these companies come out with bad earnings, they're waiting in this. You don't have a lot of AI in this. Watch out. You could break out to the downside and get very quickly a summer correction. I didn't say bear market, a summer correction. I want you to be very careful of what you put in my mouth. Some of you will write me and go, well, look, you said we're going to have a bear market. It's not what I said. You can get a summer correction. In the 10-year note, came down to the Bollinger Band, oversold, kaboom. Now, the first battle back fought at the 100-day average in the 18, and then it was able to eke out that high. Are we trending? Absolutely not. You got lower and low, higher high. It seems to be a no man's game right there. And the same in the 5-year note. I don't see them doing anything that I know how to catch. Dollar index, I'm bearish. When we had turned down back here, and I can come back to you with that. You and I had talked right here. This was Wednesday, and I said, now you got a number where the pros might want to sell the market short since you have lower highs, lower lows. Risk would be over that high, and maybe you can get back into this area. That's what the market is pretty much trying to do. In the euro, the opposite, but now you're up to the 100-day, the 200 in the Bollinger Band, and not embedded. So I think the pros will be coming out of the euro up here for a bit. In the British pound, well, you got to let the election results sink in. And we're probably getting to that point. So I'd be looking very carefully at the upper band in an overbought market, thinking the pros are going to start dumping at this point long positions. Bitcoin is still bearish. Now, every day we keep hearing people waiting to get the Ether ETF. Number one, I don't think it'll have anywhere near the demand that Bitcoin had. Number two, this is still a market that's under selling pressure. And again, my theory, you get under that 18-day average, you're only looking to be bearish, not bullish. Let the bottom pickers keep coming in. At some point, where are they wrong? Were they wrong at 68,000, or were they bailing at 56, buying again here? And now the market just got down to under 54,000. I mean, you don't pick a bottom. It's one thing to cover a short. It's very different to be a bottom picker. You lost the bullish embedded reading, and you lost it early on in Brent this morning, and you did the same identical thing, in WTI. Now, last night I had put out a recommendation, but I always state, work with me. If you've got an embedded reading and you're looking to buy, you've got to make sure you keep the embedded reading. So you're just opening your chart. Is it still embedded? I'm in great shape. If you lose it, you don't want to be a buyer, because you might lose that reading. And if you lose it, the market can easily retreat before it goes up and through the most recent high to the 18-day average it closes. The only day it can regain its embedded status is the day after it loses it. So did it lose it today on the close? Yep, 76.88, and it's even lower at 67. You'd have to have a dramatic price rally tomorrow in order for it to re-embed. It can, but that's what you'd have to get. Rebob gasoline, the same identical thing, and natural gas has just been falling out of bed. Is it going to be able to get down and make new lows? My work is saying it could. Everything's turning bearish. Remember, we had a bearish crossover here. The 18 got under the 200. I was hoping the market would hold this. When this gave ground, and notice every day you're hitting the lower band. Today was the first day you did it, so you have a gorilla glue trade, and once you start drifting away from it, you generally get a little bounce in the market. The question is, can you keep the embedded reading? The first good rally that's embedded keeps this. I think the pros will hit it with both hands. So there's a lot to be looking at here. I want you to take advantage of what I can teach and give you ideas about. Part of it's through this sale, IraEpstein.com, courses and research. Remember, you can move your clicker to the top here. It'll take you to our website, or just go there. I'm Ira. See you all tomorrow.